What is going on, guys? It's your favorite mortgage lender, Abdel Kouami, Got Mortgages. What a crazy last couple days that we've been having. Interest rates, as I'm sure most of us have been seeing, have kind of reversed the course of what we've been essentially been looking at for quite some time. We're going to dive specifically into what happened last week. We had a lot going on. We had the Fed fund meeting. We had a JOLTS report came out, ADP report came out, BLS report came out, and then we had a little bit of a transition today with the 10-year auction. So I'm going to dive into everything in detail, and we're going to go over stuff step by step, okay? So again, a recap, what we're going to go over specifically is we all know the Federal Reserve has once again paused their interest rate hikes. This is the fourth time that they've gone ahead and successfully paused. We are going to simultaneously talk about this Wednesday jobs report, the January report. What happened with the January report? Why are rates all of a sudden starting to trickle up extensively? We saw a little bit of a slow start for the private sector job growth, which is the ADP report, which is kind of throwing me off because I'm like, wait, hold up. How are a lot of people losing jobs? These large corporations are constantly laying people off, but then we're claiming that there's 353,000 jobs that were created on Friday. Makes absolutely no sense. We're going to dive deeply into that. We're going to talk about a little bit again of that uptick of December job openings, which came out on Tuesday, the job opening and labor turnovers and what's kind of transitioning with that statistically around this time, right? Remember, the reports that we get are always 1 month lag. We're going to look at unemployment claims. So this is where I'm kind of like, I'm so thrown off with this data because unemployment claims has once again, they come out weekly and they have gone up. But then we're saying that there's less jobs being created. So not really sure exactly what is who to believe, right? And then the last thing is home prices continue to move up. We got Case-Shiller and we got the FHFA, and they both showed consistent home appreciations of close to 7%. We have 1 more month to wrap up 2023 data in terms of the appreciation and take it from there, okay? So we're going to dive first into the federal funds meeting, which the Fed met on Tuesday. They came out on Wednesday with their press conference, and what happened? So there was, obviously, we all know, 11 hikes that occurred from March of 2022 until about 4 or 5 months ago, right? The Fed have left their unchanged benchmark interest rate essentially between 5.25 to 5.5. Now, this is, again, the fourth time that they have now gone and paused after 11 hikes, which is huge. Now, again, the federal funds rate, guys, is not the same as interest rates, although it has a direct correlation. The federal funds rate is the interest rate for overnight borrowing for banks, okay? So it's eventually going to translate into the cost to the consumer, but it is not a direct interest rate, okay? The Fed, again, as I mentioned, hiked 11 times from March of 2022 to July of 2023 to slow the economy and slow down inflation, which is exactly what they ended up doing, okay? So recapping that, we all know once again that the Fed is mainly focused on bringing inflation down to 2%. The last PCE report, which is the Personal Consumption Expenditure report, that specifically gauges inflation, has dropped to 2.9%. So we finally got a 2 reading, 2.9, 2%. We're slowly getting there, right? Now, the one thing that was positive with this is that the Fed Chair Powell actually went and confirmed and acknowledged that the data we've been receiving for the last 6 months in terms specifically of inflation was favorable. They did not mention once that they were going to potentially hike, which is awesome. Now, he did mention, though, that there's more than likely an unlikelihood, I should say, of there being a potential rate cut in March. Now, we are going to get 2 more data readings with employment and inflation by then. So that should give us a little bit more insight in regards to some of that data that could potentially change their position, right? Now, again, what the heck happened with the jobs report, the BLS report? This is what is causing the market. As always, we're going to wrap up the call at the end, showing live interest rates and go over the options. But this is going to what we're seeing. So the Bureau of Labor Statistics, like I just stated, also created supposedly 353,000 jobs in January, which was almost double what we thought it was. I shared that video earlier this morning, a shortened snippet, right? In December, they added 126,000 jobs in those months combined, which makes no sense because in November and December, there was that much more of a reduction and unemployment stayed at that 3%. Remember, the higher the unemployment rate, the lower the potential interest rates that we're going to get. Okay. So, again, with headline jobs slowly starting to kind of be a little stronger, we really are trying to see a little bit of a revision, specifically January. There's always so much revisions. You have new benchmarks being set, seasonal adjustments being set, and then we also have population control that makes a very big difference in terms of the data. Now, there are two reports within the jobs report, again, that we look at. There's two things. We look at the business survey, which is the headline number, and then we look at modeling and estimations, right? We see the household survey, right? It's considered more for real time. It's derived by calling households to see if they're employed, which is interesting. And it's crazy because those reports from the household survey actually showed that there was 31,000 job losses, not gains. So something's got to give. How can you tell me there's 353,000 jobs created, but then we're simultaneously having these household surveys, which are statistically backed, showing vice versa? So eventually the thing's going to crack and the Fed is going to slowly, in my opinion, really kind of wean away from this labor force and labor market because we know the economy is being extremely resilient. Now, we talked about private sector, and that's the ADP report. And look at the massive drop. And this is why rates went from almost as high as 6.7, 6.8 to almost 6.625, right? We started seeing also the employers added only 107,000 jobs, which I just shared. 77,000 of those jobs were industries with goods, and producers ended up doing the rest, right? Now, we saw a little bit once again with the JOLTS report, which is job opening and labor turnovers, saw a little stronger of an uptick where we actually saw jobs increase from 8.925 in November to a little over 9.06. Again, not that big of a difference, but still seeing a little bit of close to just over 0.1 million jobs that are created. Again, hiring rate, according to this, went from 3.5 to 3.6%. Okay. So kind of seeing a little, again, the uptick that we want to see with that. Now, as I mentioned, unemployment claims have once again risen. Okay. So we're now seeing 224,000 people who are applying for unemployment and an additional 70,000 people this week, almost 1.9 million are claiming unemployment benefits continuously. Okay. So we're seeing that plus the latest job cut numbers is kind of showing a little bit of a transition in regards to the January market. Now, home prices, I shared this before. Where are we at statistically? Home prices, according to Case-Shiller, right, which is again one of the quote unquote gold standards, has shown that home values have appreciated once again 0.2% nationally. Okay. And you got to look at some of these areas. I mean, Miami is almost 0.7%, Cleveland almost 0.9%, remember this is monthly, and then Las Vegas almost 1%. We're seeing a little bit of almost 5% appreciation year over year. November was one of the biggest months, like we saw. I saw the largest home price and home sales in terms of values. I shared something earlier where if you bought a house from 2018 to now in the last 6 years, based on national averages, you would have gained 51% of home value appreciation, meaning you've literally doubled your money. Okay. Now, the FHFA, again, which also confirms single family homes based on the loan limits, and that also showed a little bit of an uptick of almost 6 to 7% in terms of the appreciation. Okay. And then what do we have going on this week? So it's a little bit of a quiet week. We don't have much in terms of data. We do have a couple different transitions with the 10-year Treasury note auction that is going to be on Wednesday, the 30-year bond auction that is going to be on Thursday, and then the weekly continuous jobless claims and weekly jobless claims that we're going to continue getting on Thursday. So we're going to kind of see exactly where that, to kind of recap, where is the market currently transitioning right now? It's certainly not pretty from what we've been kind of used to, but we will certainly start seeing a little bit of that transition occur. But if we go over here, we go to our mortgage rates, we are going to see we just broke over the ceiling of 7%. Again, this is according to Mortgage News Daily. Every consumer is going to be a little different. We've been keeping our margins ridiculously low in an effort to compete within the ever-changing market. Now, you can kind of see we kind of are back to where we started towards December, right? I would say around December, let's say 12th, we're kind of close to where we kind of started, where we saw a sharp downtake. This is when the Fed announced they were going to cut. Then we've been kind of playing a little bit of up and down roller coasters, right? We saw a big drop. This occurred last week, and we saw a big drop. Rates almost dropped to 6.63%, which was awesome. And now we're kind of teetering a little on the higher side pretty aggressively. You'll see downtick, 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 downtick because the ADP report came out, jobless claims came out, and then we've literally reversed course since then. And then we want to be able to see hopefully where the market transitions and exactly what the expectations are moving forward. So, as always, I appreciate you guys jumping on. I will continue updating us with all the weekly market updates, shooting my short videos. Any questions that you guys have, as always, visit our website, gotmortgages.com. Please feel free to reach out to us if you have any questions. Talk to you guys soon.